Support is growing for debt relief to help some of Africa's most indebted nations amid the coronavirus crisis. But there is one big question mark: China. A 2-decade lending spree has propelled the country to the top of Africa's creditor list. And analysts say any comprehensive debt deal would require Beijing to take a leading role and swallow some losses. This week, according to 2 sources familiar with the process, China is likely to endorse a temporary freeze on debt repayments by African countries, part of an expected agreement by the G20 major economies. But analysts say China is unlikely to lead the charge on the next obvious step: broader debt relief. With over 12,000 COVID-19 cases to date, Africa accounts for only a small fraction of the more than 1.7 million infections globally. But African countries have taken a disproportionate hit in the economic fallout from the new coronavirus. Many are dependent on oil, which has suffered plummeting prices, while weaker currencies have ramped up external debt servicing costs. The continent's economies are expected to contract this year, and 20 million jobs are at risk, according to an African Union study. African finance ministers are calling for an $100 billion stimulus package, of which $44 billion would come from not servicing debt, bilateral, multilateral, or commercial. They also want some debt owed by Africa's poorest nations canceled outright, and the remainder converted into long-term, low-interest loans. China is also facing financial damage, though. Its economy is expected to contract for the first time in 3 decades, and Beijing has signaled little appetite to go beyond its well-worn playbook of bilateral negotiations with debt-distressed partners.